What if we told you that over the last 5 years, returns from a commodity were higher than several traditional asset classes in India? Let's look at the numbers. As on 31st January 2026, CAGR performance in last 5 years, Nifty 50 TRI gave 14.5%, gold gave 28%, but silver gave 36.5%. So clearly, it was silver. In just 5 years, silver in India delivered a CAGR of 36.5%. That means rupees 1 lakh quietly became more than 4.74 lakhs. And yet, most retail investors still treat silver as jewelry, coins, or something lying in a locker. Today, we are not here to hype silver, we are here to understand silver. Why silver? Why now? And why silver today is no longer just a precious metal but a modern strategic asset. By the end of this video, we promise one thing. You will understand silver better than most investors in the market. Now let us begin with the most important question. Why silver and why now? Why is silver suddenly everywhere in investor conversations, ETF launches, and commodity reports? Because something very unusual has happened. Look at the long-term performance of silver in India. As on 31st Jan 2026, silver delivered CAGR of 35.3% in 7 years, 25.8% in 10 years, 14.3% in 15 years, and 16.6% in 20 years. Very few assets in India show this kind of consistency across time periods. But the real story here is not returns. The real story is transformation. Historically, silver has been used as money for over 4,000 years, serving as a primary form of currency, trade, and store of value across numerous civilizations. Kings minted coins from it. Then silver slowly disappeared from finance and moved into industry. And now something rare has happened. Silver is back in finance and booming in industry at the same time. This dual role is what makes silver unique today. If silver is rising so strongly, the next logical question is simple. Is this rally supported by real demand or only speculation? Let us look at supply and demand. Prices can rise only for one long-term reason. Demand must grow faster than supply, and silver today is facing a rare global shortage. Look at the global supply and demand data from the World Silver Survey. From 2021 to 25, silver has recorded a deficit for 4 consecutive years. Since 2021, global silver demand has been higher than supply. In simple words, the world is using silver faster than it can mine silver. Now look at where this demand is coming from. Industrial demand has exploded. In 2016, the industrial demand was 491 million ounces of silver. By 2024, it has crossed 680 million ounces. That is more than 38% growth in just 9 years. A normal petrol vehicle uses around 15 to 28 grams of silver. A hybrid uses around 18 to 34 grams. A full electric vehicle uses 25 to 50 grams of silver, almost double. Now multiply that by millions of EVs being produced every year. And here is the most important point. This silver is not recycled easily. Yes, it gets locked inside panels, circuits, batteries, and electronics. Once used, it disappears from circulation. Now look at supply. Silver mining is not flexible. Most silver comes as a byproduct of copper, zinc, and lead mining. So even if silver prices rise, production cannot increase quickly. Demand is rising fast, supply is rigid. But there is another invisible force pushing silver higher for Indian investors: currency. Here is the fact most investors miss. Part of silver's return does not come from silver, it comes from the dollar. Silver is globally priced in US dollars. So whenever the rupee weakens against the dollar, silver prices in India automatically rise. Look at the performance comparison. Over long periods, silver in USD delivered around 22.01% CAGR over 10 years. Silver in INR delivered around 25.76% CAGR over the same period. That extra 3.75% comes mainly from rupee depreciation. This means silver naturally protects Indian investors from rupee weakness. If the rupee loses value, your silver gains value. No trading, no timing, no prediction. During periods of high inflation, global uncertainty, and currency volatility, precious metals may show relatively better performance. Gold does this famously, silver does it too, and sometimes even better. Now the next question matters the most for portfolios. How does silver behave compared to equities? Let us compare silver with Nifty 50. Here is a surprising truth. Silver and Nifty 50 do not move together. Their correlation is extremely low. From the data, 1-year correlation 0.07, 3-year correlation 0.10, 5-year correlation 0.12, 7-year 0.15 and 10-year correlation 0.13. This is a low positive correlation, which means when equity stocks fall, silver prices may rise or does not necessarily fall in the same proportion. Now compare returns. Over 10 years, Nifty 50 TRI delivered around 14.2% CAGR. Silver delivered around 25.8% CAGR. Over 15 years, Nifty 50 12.1% CAGR, silver 14.3% CAGR. Sometimes silver beats equity, sometimes it matches equity. But the real power is protection. Silver reduces volatility, silver improves diversification. Now comes the most powerful proof of all. What happens if a normal retail investor simply does SIP in silver? Let us imagine a very simple investor. No trading, no stock picking, no timing, just a monthly SIP of rupees 10,000 in silver. That's rupees 1.2 lakhs per year. Over 15 years, total investment becomes 18 lakhs. Now look at the result from the data. The market value becomes approximately 1.19 crores. Your 18 lakhs is turned into nearly 1.19 crores. The annual return comes to around 22.5% XIRR. Now look at shorter periods. 3-year SIP return 113%, 5-year SIP return 64.2%. This shows something very important. Silver is volatile in the short term but extremely powerful in the long term. Time may convert volatility into wealth. So silver works. Now the final practical question, how should investors invest in silver today? This is where fund of fund comes in. Physical silver has problems. Making charges, storage risk, locker cost, theft risk, purity doubts. This is why silver FOF is becoming popular. Let us see what Angel One Silver ETF FOF offers. By investing in Angel One Silver ETF FOF scheme, an investor will get the exposure to the following. Investment. Angel One Silver ETF FOF will invest in units of Angel One Silver ETF, which will further invest in physical silver. Next, no physical holding cost. As the investment is in a silver ETF via an FOF and not in physical silver, investors do not incur making charges or bank locker expenses. Next, no risk of theft. Since the investor is not buying physical silver, there is no risk of theft. Low correlation. Helps to diversify portfolio due to low correlation of silver as compared to other asset classes. Currency and inflation hedge. Acts as a hedge during economic crisis or inflationary period. Additionally, Angel One Silver ETF FOF provides SIP investments facility. Daily SIP rupees 250 and in multiples of rupee 1 thereafter. Weekly SIP rupees 500 and in multiples of rupee 1 thereafter. Fortnightly SIP rupees 500 and in multiples of rupee 1 thereafter. Monthly rupees 500 and in multiples of rupee 1 thereafter. Quarterly rupees 1500 and in multiples of rupee 1 thereafter. Please note that the NFO is open from 9th February 2026 to 23rd February 2026. Now let us conclude this story. Let us summarize silver in 5 simple truths. First, dual identity. Silver is both a precious metal and an industrial metal. Investment demand plus technology demand, a very rare combination. Second, structural demand growth. Solar, EVs, electronics, data centers, this is not just a cycle. Third, supply constraint. 4 consecutive years of global deficit. Supply cannot rise quickly. Scarcity supports long-term prices. Fourth, currency protection. Rupee depreciation automatically boosts silver returns. Natural hedge against inflation and currency risk. Fifth, portfolio diversification. It has low correlation with equities, may protect during market stress. One thing is for sure, silver today is not a shiny metal, it is a strategic asset. But here is the hard truth. Silver is volatile. Silver may fall sometime. Silver may disappoint sometimes. This is not a guaranteed wealth machine. But history shows one thing clearly. Whenever technology growth, inflation and currency risk rise together, silver performs. And today, all 3 forces are rising together. So the real question is not whether silver is good or bad. The real question is, does your portfolio have any protection outside equities? Because when the next global shock comes, diversification decides survival. We hope this guide helped you see silver not as jewelry but as a serious modern investment. And if this helped, share it with someone who still thinks silver belongs only in lockers.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.